at the heart of the Flexys proposition, ultimately we're using real-time technology. Then Phil, with Flexys is the idea that actually you can enable customers to self-serve that journey. So trying to get that hook as soon as you can to get the customer to engage. What we've done is that we use an AI assistant in our configuration tools.
Hey everybody, and welcome back to another episode of the Curiosity Code. Actually, it's not another episode. We started a whole new season of our podcast where we'll be exploring the cutting edge of fintech technologies, talking to people who are changing the world of fintech. And today I'm pleased to have as a guest James Hill. He is a CEO of Flexys, a fintech company that is revolutionizing debt management and debt collection through innovative world-leading technology. With over 2 decades of experience in project management, change management, and team leadership, James has led senior roles at Treble Group and Howard Training, demonstrating his expertise in professional services and business development. Well, we can't wait to start the conversation. Welcome to the show.
Great. Thanks, Alex. Pleasure.
All right. Let's just dive in to debt collection and debt management. So this is the core business of Flexys. I'm sure you can talk about ways to automate debt management, or maybe share some examples of how Flexys is using automation to transform the industry in this area.
Yeah, of course. Yeah, no problem. So I guess at the heart of the Flexys proposition, ultimately we're using real-time technology, real-time software to improve and automate that entire debt management and collection process. And if you think about what that process really is, I mean, whether it be in B2B or B2C, you have an enterprise organization, you have an end customer, you have someone who owes someone some money and someone is trying to collect it, right? And traditionally, for lots of enterprise organizations, whether you be banks, financial services, utilities, telcos, that is people and technology, doing some of those tasks. Some of them have more people than others. And I guess the opportunity that we saw and that we then fill with Flexys is the idea that actually you can enable customers to self-serve that journey. You can have dynamic journeys for customers and you can allow them to engage 24/7 through digital channels, and actually using workflow and automation and decisioning, you can provide customers with those outcomes in real time at any time.
That sounds amazing. Can you highlight key benefits and maybe pitfalls that lenders and borrowers can expect from automated debt management services?
Yeah. So I think if you strip it down to the sort of core, why is it good? Why is the software good? I guess we would say that organizations can collect more faster in its simplest proposition, right? Mm-hmm. So if you think of how long it takes, so someone receives a bill or has a regular payment, the customer fails to make the payment. So at that point, the core system of record doesn't see a payment, right? The ledger doesn't see a payment come in. So in that environment, how does that system tell the next system that something hasn't happened, right? So you think of all the time and you think of that timeline that stretches out before it gets to someone who goes, oh, the customer hasn't paid us, we need to do something. And then that sets off a whole series of processes. In our world, all of that happens automatically. So realistically, at the sort of highest value proposition, we would say that if you can collect more faster, then ultimately you can grow your business quicker. You can reduce your risk. You can reduce your complaints. I mean, you can optimize the efficiencies within your team. And I know typically that if you were in the core banking system of record world, right, people spend millions and millions of pounds transforming the front end of a business. Mm-hmm. You might expect me to say it, but obviously if you if you only transform the front end of your business and you lend lots of money, if you can't get any of the money back in, you don't have a very good business. So what we would say is that really you should transform across the process, and you should really transform across the business process and the customer lifecycle, so that actually you think about the fact that if you can integrate in real time between your collection system and your system of record or your core banking system, then as soon as something happens at any point in the journey, everyone knows what's happening. And it means customers have a better experience, and it also means that information is more freely available to all of the users of those systems.
So what's the catch? What's the most difficult part of getting up and running with that kind of processes and systems? So why not everybody's using that?
Yeah, of course. Yeah. So I think it depends. It's a really interesting one. It depends on probably where different types of organizations, different types of use cases, and where you are right now, right? So in any world, I mean, I knew nothing about collections when I joined Flexys. It was a completely new thing to me. I mean, I looked at it and I was like, well, it's B2B software. That's what I've sort of always done. So it can't be that complicated. And then you find out all the nuances of a sector, right? How is it different from this, and how is it different from this? And, you can apply that. But I mean, we have a client cross-section that covers both B2B use cases, B2C use cases, everything from banking to water to personal loans. The challenge is always integration. So what are the other systems that you need to integrate with? You have a really modern system of record or a modern core banking platform like a Tomb or a Thought Machine or Pismo or something like that, right? Great. If you do, we can integrate in real time. Do you have an old batch-driven core system? We can integrate, but obviously if you're integrating in batch, then you're not going to be getting that sort of real-time benefit. And also then, what does the process look like? So in some cases, some of our clients had no digital self-service offering, so nothing for the customers in terms of in collections. So there's sort of quite an easy win there in terms of uplifting capability. But really complexity always tends to be around integration. And I think sometimes, as I'm sure some of the other people who've been on the podcast have talked about, software projects get a pretty bad rep in terms of how long they can take. I think sometimes people think, we once implemented, I'm not going to say a name of a piece of software, but we once implemented it. It cost us millions of pounds, and 5 years later, we still didn't have anything. So we're not doing any more software implementations. And actually, the world sort of moved on, I think, in a lot of cases. We don't want to build a huge professional services business. We want our software to be able to reach financial services organizations who are just starting their journey and actually want to start by digitizing and automating everything, right? And scale all the way to a large enterprise. But equally, we want to, reach those large enterprises who are already at that point. But we want to do it in the sort of lightest touch way possible. We don't want 1,000 days of projects, right?
Yeah. Let's finish up this section with clear comparison between the automated debt management strategies and traditional debt settlement approaches. Just, to paint a clear picture, what are the main difference between these two worlds, besides the things that you already mentioned, time that it takes just to get the right data in the right hands to get the debt settled. Can you try to paint the picture for me and listeners?
Yeah. So I guess traditionally the approach would be, if a customer falls into arrears, often the first call to action is most likely going to be, let's say it's a text message, right? It might be a letter, depending on the type of service it is, or the type of facility. But let's say it's a text message. Typically that will say, you need to call us or we need to call you. So it's the first sort of barrier, right, to something happening. And as everyone knows, debt's a very sensitive subject. The one thing people who are often in debt or struggling with money don't want to do is just talk to a stranger about their financial situation. But typically in that world, ultimately there will be probably a phone call. And at that point, do you can you afford to pay this? No. Okay. Can we offer you a repayment plan? And then at that point, you would be going through like an income and expenditure assessment. What's everything you spend? What's everything you get in? What are you left with? And then the client at the end of that, so the enterprise organization, would be applying their business rules to what they could offer that customer. So that process is very manual. In some cases, it can be quite subjective as well, around some of the information that's captured and how it's processed. And it's not really optimal. It's definitely not 21st century, right? It's not particularly optimal. In a sort of a modern tech debt management platform, the approach would be you still have a call to action, which might be a text message or a WhatsApp or a nudge or whatever. But actually that initial engagement that you're asking from the customer is probably, why don't you log into this portal and see what's available to you? So straight away you take out the personal, this is going to be a difficult conversation aspect.
Right.
You allow them to engage at any time. And also when they do engage, you're putting those customers through dynamic journeys that allow them to react to what they're telling you. So if the customer discloses that they're vulnerable, then obviously you can filter that customer off to the suitable team who can talk to them, and in terms of in line with consumer duty and things in the UK. If the customer wants to make a payment, let them make a payment. I mean, I'm sort of a strong believer that if you want to make a payment, you definitely shouldn't be making people call up to make a payment. It's very inefficient. So let them make a payment, and if they want to do an income and expenditure assessment, do that assessment, and then have your decisioning logic codified in the system so that you can make a real-time decision to the customer. And it may be that, the goal of this is always getting the earliest possible engagement with the customer. So trying to get that hook as soon as you can to get the customer to engage, because that's really the best possible chance of resolution. That's what all of our clients want to do is speak to customers and engage customers early. And if you think of how that process really, at the heart of it, the actual business process may be very similar, but when you think of using technology to change it, you suddenly introduce the ability, your contact area with the customer is now 24/7 versus your hours you are available. You remove the barriers of having to have a conversation with a person, having to have information available. You can leverage tools like open banking. Can you use open banking tools with account information so that you don't have to ask people to go and find a bank statement? Can you do pay by bank so you don't have to ask someone to find a card to make a payment? Any bit of a process where there's friction, you can use technology to help take that friction out of the process.
Yeah, I remember having a conversation with one of our guests about open banking, how that changes things up here in Europe, especially. I imagine throughout this interaction with customers or users, clients, however we call them in that regard, there are lots of opportunities to apply AI. Can you talk a bit about that? How do you guys apply AI in your product?
Of course. Yeah, and I mean, there are lots of different things across the technology spectrum, particularly in debt management and collections, around AI and where that's used and how it's used. I guess in our world, we're seeing less of the direct customer-facing aspect. I mean, there are some voice analytics tools that exist in the market that some of our clients may be using anyway. What we've done is that we use an AI assistant in our configuration tools. So where we have user config tools within the product, we're using an AI assistant to actually help business users change the configuration without the need to have lots of technical skills. So for example, if you want to build a new communication strategy, to do that, you'll need to know what time to contact someone, the frequency of contact, the initial method. Now, we'll know a lot of that information within the software based on, likely preferred method of contact, age group, timings. We'll have some of that information around success. But also, when you write your communication template, obviously then you need to change that into code and then deploy the code. And what we do is we use that assistant to basically take the template and we can generate the template, but we can also then generate the code on the fly. So it makes the software accessible for business users to change and edit without having to come back to us to ask us to develop new strategies for them, which is really important, because ultimately that becomes, often with legacy software, it's the sort of key limitation, right? Is that you have to go back there. Sometimes you need a release and this, that, and the other. In our world, we want all of those config tools to be available to the client. I guess the other side of the AI tool conversation is, what's the purpose of AI? It's going to be around speeding up a task. It's going to be around, getting to the right type of information quicker, summarizing information, and there are lots of tools in terms of how you can do that. I guess in our world, automation is a really core part of that. So actually being able to take a collection of different business tools, like using workflow and decision tables, and actually putting all of those things together to drive outcomes. Some of those things really are sort of the sort of super powerful things. And obviously, we have clients who are using other AI tools in the business that, of course, we can integrate within if they are part of the customer journey. But for us, our focus has been at this stage definitely more on simplifying the configuration of the software to make it more accessible for the business user.
Would it be correct to say that in your world and debt collection automation, like workflow automations is the main driver of innovation, or there is something else that drives innovation in that area?
So it's interesting. Yeah, the innovation question is really interesting, because I think at a technology level, there have definitely been changes in underlying technology that have allowed providers to innovate faster. So, for example, real-time technology. So having real-time Kafka technology, stacks and things like that, that mean that, when we partner with someone like Thought Machine or Tomb or Saskada or Mambu, we can integrate with them in real time. And then when we roll that out for a client, it is a much better experience. It's much faster. And we can develop really complex journeys, like really sophisticated journeys, because we can exchange data in real time.
Hey, speaking about cloud architecture, if any of our viewers would like to assess their business and test how fully they are optimizing their SaaS infrastructure, in the description of this video, I'm going to leave a link to the test, SaaS Infrastructure Optimization Challenge. Catch up at the bottom of the video. It will take just 5 minutes of your time, and at the end, you'll get an indication of where you stand and validate tips specific to your case. Now, back to the show.
And so I think that's been a huge thing, really, in terms of just what's possible in terms of integration. The idea of having these sort of super large middlewares and things like that, and then lots of sort of complex integrations out. Now we've been able to do things with some of our clients where we've done, Kafka to Kafka integrations, and then they are then sending some of those messages to certain things, to payment providers, some to comms providers. And it's been able to build a really slick end-to-end process. I think then the other question around innovation is who drives the innovation beyond that. So, what role does the regulator play in driving innovation? Does the regulator, because they come along and say, you need to treat customers in a different way, does that make, some of these enterprise clients think about how they need to build different strategies? So if our software doesn't, if you're client A and your software doesn't offer any kind of self-service journey to a client, to a customer, then you may need to go and buy some software that does that, right? But then if you're innovating because the regulator tells you to do something, the question is really whether you're just innovating or whether you're just adhering to what the regulator tells you to do.
Right.
And then how much does the customer drive innovation? How much does the end customer drive innovation? Because, if you had a bank account with, a legacy bank, a legacy tier 1 bank, we've probably all got it. I've got one, and I've got 3 challenger bank accounts, and the legacy one I sort of keep through nostalgia. Like, my salary goes into it. It's the one I opened when I was 15. My salary, it had a branch. It doesn't have a branch anymore. My salary goes into it. It's one of these odd things where like everything about everything I do day to day tells me that I should know better than keeping a bank account for that reason, right? But there's a little bit which is but it's a reliable bank, it's a well-known bank, and sort of there's a bit of that thinking in there, which I guess keeps people with legacy banks. But then the challenger banks I use, is my, sort of personal account, my joint account, my son's account, all different accounts we have. Our business account, we have a legacy bank, and then the one we have for the team is with a challenger bank. So, we've done exactly the same thing. And so I guess at some point customers vote with their feet on what they want. And then that drives innovation. I mean, if a bank can't innovate fast enough to meet the customer demand or know where the customers want to be, then ultimately the bank will cease to exist, right? Or the organization will cease to exist. So I do think that the consumer is one of the biggest drivers of innovation, because your expectation levels are higher and higher and higher. If you don't have the ability to self-serve your mortgage, you may decide that you don't want a mortgage with that organization. The rate may be great, but you just might go, yeah, I didn't really like the platform that I had to register on. It took too long. It was too slow. And so, you're in a very consumer choice-driven world. And so I think that in how people build strategies and how they build those things, the customer experience side is really important, because I do think that's a massive driver of innovation.
So what are the top debt management difficulties that you face on a regular basis?
So the most difficult things, so probably in the very largest organizations, it will be data. I mean, you could probably apply that sentence to every single software implementation of all time, but it probably is data. If you've got poor quality data, or if you've got, lots of sort of disparate sources, or you've got core systems that you just cannot get data out of, it will always be a very difficult process. I remember working with a large organization who were in that situation. It was really difficult to get information out of their core system. They had multiple cores, and ultimately, you're in this sort of, batch type environment. It's not ideal. It's much slower, and this, that, and the other. So I think data is the key, right? I think you have to make sure you've got good quality data. The other thing I think is probably, depending on what part of the software you then look to leverage, I think understanding what you want to get out of it. So what are your outcomes? Where are you on day one, and where do you want to be? Because if your goal is to increase digital income and expenditure, assessments by customers using open banking, if you don't do any customer comms to tell them about open banking, what it is and why you're using it, no one's going to use it. So you come back to the provider and go, well, the open banking thing didn't really work. And you go, yeah, but you never told anybody what it was or why you were doing it and what the benefit was. So I think there's some things around goals and comms. But yeah, I think fundamentally, I mean, data is definitely at the heart of it.
So how do you guys overcome these challenges with data accuracy at Flexys?
So I think ideally, if someone has, I mean, the key really is integration to the core, right? So I think if you've got a modern core, then obviously we've got lots of relationships and things in place that help us anyway, because we are most likely partnered with them. We've most likely already looked at things like how we'd integrate. We've most likely got that stuff mapped out. And obviously, like, modern technology is built on the premise of being accessible and open. So I think in that sense, the idea of moving data freely between systems is much more common. I think if someone's in the scenario where, maybe they've got a very, very old core that they really can't get any data out of. I mean, We've seen some that have, no APIs, no ability to get data out of. At that point, you probably are in a world where you might be having to design a batch process. And at that point, really, it's around how you can just make that as good as it can be. I think in our world, we can integrate in pretty much any way. And actually, if you've got the flip side of that is that if you've got a small number of customers, so let's say you're a growing business and you've got a few thousand customers, and obviously then a smaller subset of those are in arrears. The reality is that doing a project to implement, real-time integration is probably not worth the money, in terms of it's probably not cost effective to spend money on engineering time to build real-time, integration pathways if you've got 500 customers in arrears, because there are spreadsheets that are really good at managing, small numbers. So I guess what we've been working on in that area is actually being able to put together, almost like a pre-packaged proposition from a product perspective that allows people to get all of the benefits of using a fully enterprise level piece of software, but actually with some of these things predefined, right? So leveraging things like pre-integrated with Twilio, we use Money Hub for open banking, using Acquired for payments, having some predefined file formats if they need to use that, file-based transfers, whatever it might be, you can provide people with that so that you've got everything from, the smallest end all the way through to the full real-time integration at the larger ends. So part of that thing is around making it accessible, and how do you make the software accessible to different types of clients.
Is that part of your growth strategy? I just want to step aside a bit from the technical side of things. I know that, tech and business are quite intertwined in that regard, but still, just want to understand your growth strategy and what steps have you taken and what were really successful? Because I see in your newsfeed lots of activities about partnerships. Is that part of the growth strategy, or there is something else?
Yeah. So, I guess part of that strategy has been around really thinking carefully about who our real ICP is. So really, who is that ideal client customer that we focus on, where we know the software can have a huge effect, and really making sure then that you spend your efforts in the right way, targeting those right customers with the right go-to-market. And that's something that, is almost as difficult as, I guess, finding product market fit, right? For startups, it's an art form in of itself, trying to get to that point where you start to qualify out of things because no one ever qualifies out, right? In the first few, it's the hardest thing to do. But I think as we've grown and developed the product and onboarded more and more clients, and, we've now across a huge number of different sectors with different use cases, I think the thing we've found is that actually what's the sort of sweet spot for all of those clients? Well, they're all growing businesses of one kind or another. They've all been either on a transformation journey, or they've been transforming one part of their business, or they've implemented a new core and then they've looked at other systems that sit around it. Or in some cases, they didn't have any systems, and so they were building greenfield, right? And they had to find the right technology. So for us, it was always a case that, well, in that debt management space, our team are pretty well known. They've worked for some of the largest organizations out there, and they've done lots of global banks and telco implementation. So we get quite a lot of inbounds. We get quite a lot of international inbounds. But then the other side of it was always, well, how do we reach some of those other people that we're not reaching directly? So, we tend to be able to reach the market we want pretty well, but how do we reach the next group? And that's where some of the partner conversations came in, because some of those were around, looking at core banking systems. Anyone who's going through transformation is starting there. I've never met anyone who's ever started a transformation at collections, but I'm willing to meet them. But everyone starts at the core, right? And so when Pismo and Thought Machine and Tomb and Saskada and Mambu and all these guys are in there, and 10x talking to clients about the transformation journey they're going on, the starting point was, let's just make sure that on the process map that they put up on the screen, it starts at the origination and disbursement point, and it goes through and it includes the line which goes to collections, and that we're on it. That we are the partner, we are the one who are integrated with them. And you get people thinking early on about the fact that if we're going on the transformation, we do need to think about the whole process. And so that was a real core part of the strategy, because increasingly then you start to talk to their clients, and some of these organizations are all series B, C, D, E, F, and G, right? I mean, they've raised money, and huge amounts of money, and are very, very large organizations. So their reach and their client base is global. The other thing with the partners was thinking about specific partners that we thought were a really good fit for our product. So payments is a great example. There are so many people that you can partner with from a payment perspective. And, I'm sure they will all sell the dream on, you could make this much money by partnering with us. And actually, that was never really the goal for us, right? The goal for us was finding a really, really good, slick payment integration. And of course, we do get clients who come along and say, well, we already use X. Can you integrate with it? Yeah, we can. But having something pre-built that could leverage things like wallet payments, pay by bank, card payments, direct debt, like to be able to do that whole thing in a really seamless way and a modern way was important to us. And so I think when we started to pick things like, who are we going to use for payments? Who do we want to use for open banking account information? Who do we want to use for analytics? I think at that point, we were really looking at similarities in some cases of who was a bit like us as a business. Like, who did we get on with? They were the easiest ones to partner with because they're always the easiest ones to work with. So partners was a really key part. And I think the next part of the growth strategy will be geography. So we've started to do a little bit this year in particular. So we did Helsinki FinTech Forum earlier in the year. We then did Money 2020. And that was all around starting to talk to European audiences about the fact that, this is who Flexys are and this is our product. And that definitely garnered some good interest. It's something that obviously we need to continue to build on. Some of the conversations were very much along the lines of, I didn't know there was software that did this particular thing. I thought it was all larger, like SAP, Salesforce type stuff. I didn't know there was specialist software that existed for this. And I was interested in just in different countries, what the cycle looked like between how much was managed in-house before it was sold. So obviously the debt sale point is off to a third party. And it was interesting in different countries, that often they were selling the debt much earlier and they weren't managing it in-house, for a significant amount of time. And I think there were just some clear wins straight away where you were like, well, if you did a 60-day digital, debt management cycle, you would sell less debt down the line. So geography is the next one, really going into the sort of next financial year for us, of broadening outside the UK.
I have a question about scaling the company. Do you think that scaling fintech company is different from scaling the company in other industries, or more or less facing the same challenges?
I suspect when you're scaling any business, I guess at the heart of it, you're always thinking about how you can increase the velocity of client acquisition without running out of money, right? I mean, that's probably the goal. I mean, how can we go faster?
That's
and
what
harder?
it is.
How can we go faster and harder at this without spending everything, right?
Yeah.
And I guess that's probably quite true. I mean, it's interesting in terms of scaling is pretty broad, right? Because obviously if you're a 100 million turnover business, you might want to scale to the next level, right?
Mm-hmm.
I want to be a 10 billion turnover business. And whilst I'm not saying that's easier, there may be less pressures along the way, right? I think if you're a 1 million or less ARR business and you want to be a 5 million or a 10 million, there are steps in that journey that are really difficult, because there are decisions that you make along the way that are always made. And actually, some people say, "Oh, I'm sure there were decisions that you would have made that weren't the right decision." I think probably every decision, in some ways, is the right decision because at the time you made it for that reason, right? You might have had a client who came along who said, "I really like you to build me this," and you might have thought, "Oh, we don't want to do this. It doesn't fit with the product," but the client's going to pay us for it, so maybe we should do it, And I think every business probably goes through those cycles. I think what you need to get to quickly, though, is the heart of what is your product really good at, and do you have those 5 or 6 clients or however many it might be who really, really love your product, who would talk to anybody else about your products and say the product's great, their company's great, and they'll sort of do it. They'll do anything for you. Having worked in different software companies, the thing that always struck me with Flexys was the relationship with our clients was not really like anything I'd ever seen before. I mean, it was, it was such a close relationship, and, there were times, good times and bad times, but I mean, the actual, I think the feedback that we had from clients and the openness and the honesty that we worked with and the speed that we worked on things. I mean, it's still, the support statistics that we have in terms of how quickly tickets are resolved, sort of things are like sub 20 minutes. I mean, I've never seen that in any other type of business, right? And it's particularly not in a large business. So I think that scaling in fintech is probably hard because depending on if you're at that lower end, the smaller end, there are always new people coming in, so you've got the businesses coming into that space, lots of accelerators, lots of sort of noise, lots of promotion, straight in, let's grow. And in some ways it's good because it creates more competition. You have to innovate faster. But I do think in certain sectors, there's sort of a critical mass of how many different organizations you can have at one point doing the same thing. There are millions there are thousands of CRM tools out there. If I asked you to name 2, we'd probably both name the same 2, right? So I think you get that idea of at some point, if you ask people to name 5 debt management systems, you probably would be getting 5 similar names. I think scaling is tough, particularly if you're trying to, in the fintech world, as you say. I think the challenge is if you asked any founder of those businesses, what do you want to do? The vision is normally, we want to, replace X legacy software and globally be used by everybody, right?
Yeah.
And when you really strip it back, you go, well, the legacy software you want to replace is a multi-trillion-dollar US company, right? I don't think you're ever going to fully replace them. And you want to be global, but you've only got 10 employees. You're not going to be global. Maybe one day, but it's a great it's a great big ticket thing. But the thing is that sometimes I do worry whether some of those things are just too unattainable. Sometimes like if you talk to a team about some of those things, I sometimes feel like that it's a very difficult goal to describe to a team because it's so far away. It's like saying, I really want to win the lottery, So we built a lot of strategies that were based around how we would get there. So, what specific things would we do? So like, what does our partner strategy look like to be able to access new geographies? What does our partner strategy look like from a sales perspective? But then if we're going to do all those things, what do we need to build to enable partners from a product perspective, from a professional services perspective, from all of the different parts of the business that would touch a really fully fledged partner ecosystem. And so then that runs almost through every team to make sure that you're actually able to do it. So yeah, I think you sort of practical strategy, I guess, is what you really need at the heart of it.
How do you guys navigate regulatory challenges? Because pretty much, I wasn't afraid to say 100% of people I talk to in the industry, they just keep chatting, talking, complaining about, how much regulatory pressure they experience. And I could imagine that in the business that you are in, and you mentioned that you want to expand globally, like every market has their own regulations. How do you manage that?
Yeah. So I guess the starting point for us is that we're not a regulated business. So our clients are, but we're not.
Yeah. That simplifies things.
Yeah. So we're not merchant of record. We don't touch the money.
Okay.
We are the software company, and we are providing our clients who are regulated with the tools to manage the process. Right.
That's a good place to be.
Yeah. Of course. The question is, though, the next question is fine, but how do you help me, work within the regulations that exist, right? And so from a UK perspective, when you take things like income and expenditure, we use things like the standard financial statement. We're using some of the open banking. So we're giving our customers, and sort of giving our clients, the tools and the data that allow them to make the decisions. If a client says to us, we have a communication strategy that is going to contact a customer every 20 seconds when they owe us money, I mean, you can say it's an awful strategy and it's an awful way to treat a customer. But fundamentally, we're not there to arbitrate on what they do. But I mean, we're sort of consumer duty, and a lot of the FCA regulation doesn't let any of that happen anyway. So from a product perspective, I guess it's really important that the tools we build are flexible and fast to adapt. So if the regulation changes and they need to ask different questions, or they need to apply different strategies, or they need to stop communicating, with customers at certain times, then fine, you've got the ability to go in and edit that and make those changes yourself. For new markets, I guess at the building blocks level, you want the ability for them to be able to design journeys that reflect the regulations that they have and the customer journeys they use. Again, you take markets like, France have some very specific communication rules, right, in terms of when we can be contacted this. So, I wouldn't see that it's our duty to necessarily build all of that into our product. But what I think it is then the importance is that we're saying, well, you can configure the times at which communications go out, or you can say, don't send anything on Christmas Day, don't send on people's birthdays. Like, you can do that. It's not for us to tell you that the product does it by default. There are some interesting things around, language. So, certain languages are much easier. In terms of some European languages, there's some great organizations that I've partnered with in a previous life that can do some really clever things when it comes to sort of language skinning for HTML, for web pages, things like that. Currencies, different address formats. So, Italian addresses are very different to UK address. I mean, your address is very different to my address. Yeah. So, how you're doing things like lookups. But I guess what you would do is you would go, well, look, we need to do a certain degree of localization for an environment.
Yeah. What
you ideally would want is to go, well, we don't want to create, we don't want one client in Botswana, right? we need a market that's got enough people in it to be able to have that proposition. And I guess then as part of your market analysis, you would look at whether there was someone who was already very, very strong in that market. So in Germany, if we felt that there was someone who was incredibly strong at a sort of an out-of-the-box German debt management system, I might go, well, do you know what? I think the Nordics and Benelux are a better shout anyway. Maybe we should look at those markets because they're also very heavily digital, lots of English as a business language, as a customer language. So there are other factors that influence different markets. But yeah, I think the further afield you get, some of the language requirements in terms of how things are presented on screen can become pretty tricky.
James, I think we're getting to the end of this episode. Let's wrap it up. I love doing this. I always ask our guests to do that. Can you share any words of inspiration to someone who is starting in the world of fintech, financial services, maybe thinking about, building a company, a startup here? What would you, tell that person from your experience in this industry?
So things I've learned in my time, even at Flexys, I would think that building the biggest possible group of people around you, like your peers, they don't have to be people who work for you. It doesn't mean building this enormous team of people. But I think that when I look at some of our partners, the relationship we have with them is not just a commercial relationship. Most of them now, I guess it's funny how we get to this stage, but I guess the majority of our partners I pretty much talk to on WhatsApp like every other day, and sometimes it will just be could be completely non-work related a lot of the time. Yeah. But it's really nice because despite those businesses all being at different points, we're all in very similar sectors and we're all trying to do the same thing. And I think that who understands what you're doing better than yourself, it's someone else who's going through the same thing, right? And I just think having those people where you can say, oh, you faced this same challenge, what did you do? And I think not being afraid to ask for that sort of help and advice and guidance. There are some great accelerator programs out there. I think if people are starting, we've done the EY program in the UK. We're doing the Rise Growth Academy at the moment. Mm-hmm. Some of those programs, not just in terms of access, but in terms of mentoring, coaching, people to have conversations with, are incredibly useful. Like the resources are endless. But I think also, don't dwell on decisions forever. Sometimes you're going to make great decisions. Sometimes you're going to make awful decisions, but it doesn't matter. It's done, right? Hopefully. And I think as long as I always say to people, as long as you've thought about the decision and you've weighed it up, then that's the decision you need to make. I think sometimes you can sort of be so paralyzed by what is the right thing to do at this moment in time that you end up not doing anything, right? Or you just don't do it when you need to do it. And often that's the worst thing, inaction, delayed action, whatever it might be, often it's the worst outcome. So I think, use that network around you, really think about the team that you need. So what's the ultimate challenge that you're going to meet? And also, if you're building a new business tomorrow, it's really difficult to think of a business that's going to do something that's completely unique, right? Because there's so few spots to be completely unique, right? But I guess the one thing you really want to think about is there a way you can create a category within that category that makes you unique? So, debt management is not unique. Being a cloud native, real time, piece of software is almost a new category within that category. And I think it's important to, and you have to keep revisiting that because everyone just comes into that category and new people come in the category and new categories appear. And so you're always going to have to constantly change and evolve, what you're doing. But yeah, I think don't be afraid to look around at what other people are doing and don't be afraid to talk to other people around how they might be able to help or what advice they could give you.
Wow. Well, that was really insightful conversation. James, really appreciate you being with us today. Thank you for being a guest. All the best to you.
Yeah, no problem. Thanks, Alex. It was an absolute pleasure.
And for the listeners, don't forget to subscribe on whatever platform you're listening or watching this to, and hit the like button, and see you in the next episodes. Bye.